I don't want to speak out of turn because the third birthday is on the 27th of April. So we're not there yet, another month to go. But I'm quietly confident, Nick, that of the world's 12,000 exchange-traded funds, it's got the highest Sharpe ratio of all of them. And that's not a statement I'd make lightly. A Sharpe ratio is a risk-adjusted return, so the amount of return you get for the amount of volatility in the product. And the amazing thing about, if you show that volatility chart, is how the volatility of Bold is not, in the middle of Bitcoin and gold. It's only very slightly above gold because of the countercyclicality.
Bitcoin or gold? My guest today has a simple answer to that question, both, but at the same time. And unlike so many pundits who merely like to give advice, he set about actually creating his Frankenstein monster. He's even launched it on the stock market for you to invest in from the comfort of your own home and likely even on your existing brokerage platform. That means owning both gold and Bitcoin in one asset with one purchase and without having to deal with questionable cryptocurrency exchanges, dodgy gold dealers, shady peer-to-peer crypto meetups, storage vaults, or cold storage wallets. Not anymore. That's thanks to Charlie Morris, who is the co-founder of ByteTree, a company that does all sorts of weird and wonderful things in financial markets and cryptocurrencies. But today, we're going to talk about his exchange-traded product called Bold. Charlie, what is Bold?
Hi, Nick. Nice to be here. Bold is the blend of Bitcoin and gold, and so the clue's in the name. And it was, some years ago, I clicked on the idea. Ideally, whilst I was at Southbank, and I wrote a piece on blending momentum investing with gold and saying how, gold's this thing that likes the world when it's going to hell, and momentum investing, the racy tech stocks and so on, likes it when things are going well. And it dawned on me that actually you could swap momentum investing for Bitcoin. And that's really because the correlation of Bitcoin and the NASDAQ has been very high over a long period of time. So basically, when the world's going well, Bitcoin goes up, and when the world goes badly, gold goes up. Put them together.
Let's keep it nice and simple. It's an exchange traded product, which means what? It's like a bundle of the two together in one asset listed on the stock market, right?
Yeah, it's like a fund that just owns Bitcoin and gold. You get an ETF of the FTSE 100 or the S&P 500, and it owns all those stocks. In this case, it's just Bitcoin and gold. Now, of course, in the S&P 500, that the biggest stock will be sort of Apple and Microsoft or Nvidia. But here, which is the bigger one? I mean, there's $20 trillion of gold in the world, and there's 2 trillion of Bitcoin. So you could do it 10 to 1. But we didn't decide to do that. Instead, what we did was risk weight it. And so you looked at the volatility of both assets, and we all know that Bitcoin's a little crazy and, gold is very calm. And so if you plug in with a very simple bit of maths, the fact that Bitcoin volatility is around 40%, which is in line with oil stocks, let's say, or banks when they're not doing very well. And gold is a very low volatility asset, sort of more like 15, 20, in line with Nestle or Unilever, that sort of thing. And so basically you end up with a weighting that's about 3 to 1 in favor of gold.
Yeah, that's the key issue here, because it sounds so simple to say, I'll just put Bitcoin and gold in one bundle and that's it. But the magic sauce is how often you reweight it to your target weight and what your target weight is. But before we get to that, what happens when someone buys a share, an ETP in Bold? Where does their money go? What's the structure? How does it all work?
So the main listing's in Switzerland on the Zurich Stock Exchange, the SIX exchange it's actually called. It's in 4 currencies, Swiss francs, euros, pounds, dollars. And it's also in Germany, Netherlands and France. Not yet in the UK, hopefully to change that one day. And just like buying an ETF or any other fund, you hand your money over to the stock market, and the stock market takes it and buys the assets that are described in the product. And in this case, they'll go to the LBMA gold market, and they'll put 75% of your money into gold, and they'll put 25% of the money into Bitcoin. So they're directly held. The gold is in custody with JP Morgan, and the Bitcoin is in custody with a company called Copper, who are basically the leading custodian in the space. And so it's an interesting product because it's the only product in the world, as far as I'm aware, that has 2 custodians, because the old financial world won't custody Bitcoin. They will custody gold, but they won't custody Bitcoin.
And your website explains that it's 100% physically backed in its underlying assets. So how can people be sure that it's there? It's all about these custodians, right?
Yeah, there are 3 gold bullion banks in the world, 3.5 in ICBC, the Chinese one, but you've got HSBC, UBS and JP Morgan. We use JP Morgan. And if you don't trust the system, then that's that. I mean, but it's there. I mean, it's real gold in a vault. On the 21 Shares website, it gives you the bar numbers. So it's, there was as much transparency as we can possibly give.
So let's examine then the investment thesis. Why would someone want to own Bold?
You've got to be in the space that you understand gold and Bitcoin and their limited supply nature and the fact that they're alternative assets. So let's start at the beginning. I mean, financial assets, what are they? Well, they're everything around us. So they're shares and bonds, which Southbank talks about all the time. But you've also got property. As soon as you rent a property out, it's got a cash flow. If you don't rent it, then it doesn't, and it's an alternative asset, I suppose. Also, the art on the wall, a classic car, a collectible, the commodities market and crypto would all be alternative assets, non-financial assets. Bitcoin doesn't have cash flow. Oil and copper and gold don't have cash flow. So when you single out Bitcoin and gold, why those two when I could have done, a basket of fine art and property and all the rest of it? These are the two highly liquid assets. I mean, gold is $150 billion a day of daily trading, which is nearly as high as the S&P 500. And Bitcoin's, not a long way off that. And it's sort of gaining credibility each year. And indeed, BlackRock launched a product a year and a half ago in America, but they launched one yesterday in Europe. So now you've got this situation where the Bitcoin and gold, really stand out as the big liquid, which means you can pick up the phone and trade $1 billion in a half a second. That's what it means. You can't do that with art and most other things. You could do it with oil, but oil you can't store. Silver's got, a fraction of the liquidity and more volatility than gold. So basically, Bitcoin has got 40% volatility. Most of crypto's got 80 to 100. And, gold's got 15% volatility. Silver would be twice that, as would oil and all the rest of it. So you've got these two very robust alternative assets which work in unison. It tends to be that one goes up, the other goes down, and vice versa. And so if you believe that that's things you should own for the long term, and it's, gold's been doing very well, Bitcoin's been doing very well over the years, then my solution is combine them and add some value through rebalancing transactions.
Yeah, we'll get to the rebalancing next. But first of all, let's examine that correlation, because the investment thesis is broadly similar, right? They're similar assets in the sense that they're alternative assets, they're liquid, and they've got this sort of anti-monetary stance, anti-legacy financial system stance. And yet, as you point out, the correlation is not particularly positive. And the fact that you've managed to combine them is what activates that overall performance. So take us through, you sent over this chart showing how the correlation in flows between gold and Bitcoin is not positively correlated, even though the investment thesis is so similar.
Yeah. So the investment thesis being similar is important. I mean, you're trying to get exposure outside of the system. And as the world prints money, both of them do well, but they do well at different times. And that chart really illustrates it. So it's not necessarily the price that's perfectly uncorrelated, because there are other factors that go into price. But you can see how investor appetite to go and buy and sell Bitcoin and gold is countercyclical, and it's so natural. And so, you find that the investor community is really interested in one or the other, rarely both at the same time.
Yeah, and you're unique for your ability to combine the two, it was great working with you for so long about both of those insights. You mentioned a few times the volatility of the two, and this informs how the weightings within the Bold ETP should be applied. So explain that in a bit more detail for those who don't quite understand it. We all know Bitcoin has a high volatility. The price goes up and down a lot more than gold. But how does that get turned into a different weighting within the Bold ETP?
Well, there's a very simple mathematical equation called inverse volatility. And this is quite widespread in finance. It's used all the time in many institutional products. So, for example, you put less money in the more volatile stocks and more money in the calmer stocks. And guess what? That reduces the risk in the portfolio. No great surprise there. Does it damage returns? Well, not really, surprisingly, because often you don't get paid for taking more risk in riskier stocks. In theory, you do. In practice, you don't. And so actually risk-weighted portfolios have done well over the years, and that's why they're quite a popular choice. And if I put 50-50 Bitcoin gold, let's say you put $100 into that package, 50 in each, the chance of making or losing $1 in Bitcoin and gold would be would be unequal. And so you're much more likely to make or lose a dollar in Bitcoin than you are in gold. But if I do risk weighting where it comes out at about 3-to-1, 3 parts gold, 1 part Bitcoin, your chance of making or losing a dollar in each is about the same, to the best of our ability to estimate that. And that's what it's all about, more exposure to the least risky asset.
So let's take us through this chart of the rebalancing weight, which shows the target weights, I believe, how much of the Bold is in Bitcoin. Is this target weight changing based on the changing volatility of gold and Bitcoin over time? Or why haven't you just picked a figure like, say, 20%?
Because if Bitcoin wants to become a major part of the financial system, which many think it will, then the volatility will come down and it deserves a bigger weight in our basket. If Bitcoin decides that it doesn't want to and it remains a fad of the past and it disappears from serious people's conversation, then the volatility will go up. And so the weight in the index will go down. So basically, we're giving the two, we're unbiased here. We're giving the two assets the weight that they deserve relative to one another. And Bitcoin volatility has been coming down over the years, as you can see. And so the weight in the index has been going up. I expect it to, so the whole thesis of this is we believe in Bitcoin. So we expect that the Bitcoin weight to continue going up, but it'll happen slowly over time. And you'll see the month by month changes are very slight.
Yeah, and likewise, the gold price can change in volatility as well, which needs to be taken into account as well. The interesting thing about this is just how beneficial it can be to reweight the portfolio regularly, because as you said to me just before I hit record, it means you're selling what's gone up and buying what's gone down, at least in relative terms, which means you're constantly sort of taking profits slowly over time, profiting from volatility. So take us through this Bitcoin daily weight chart, which shows this. Over 2024, since April 2024, showing how the Bitcoin weight, each time it gets reweighted, it comes down. What you're doing effectively there is selling Bitcoin and buying gold, correct?
Correct. So in November, Trump got elected. We might remember that. I'm sure you've written about that, Nick. And the price of Bitcoin went crazy. And gold didn't. And so the weight of Bitcoin in the basket during the month, so it was set at the beginning of the month for the target weight, then Bitcoin went up during the month. And at the end of the month, the weight has gone all the way up to 32%, having been at 25 at the beginning of the month. And so we sold 7% of Bitcoin and added it to gold. And that's a formula. That is no one's decision. And that happens on the last working day of the month at 3 p.m., which is the London gold fix. So we trade that basket at the time of maximum liquidity in the market. So the spreads are tiny. And then the opposite happened in the end of February, where when Bitcoin had a very weak month, some bad news came out, and people decided, it's not going anywhere. This is it, and we bought the dip, and it happened to be the price low, and so it added a lot of value. And so just those two transactions were instrumental in adding quite a lot of value for our investors. Sometimes the rebalancing is not very much. Sometimes it's quite big. But the bottom line is that by keeping the target weights, we're maintaining the level of risk. So if we only rebalance once a year or something, then the divergence between the target weight and the actual weight would be huge. And so investors wouldn't know what they're getting. So we just keep it consistent and manage it for risk primarily. And the additional return that comes from rebalancing is a nice bonus.
And you're fantastically transparent about how you do this. I'm going to quote quickly from the website here. Following rebalancing on the 28th of February 2025, the new target weights for the Bold Index are 25.5% Bitcoin and 74.5% gold, a 0.6% increase for Bitcoin over the previous month. So that's a good example of how this is working out over time. And I just want to quickly clarify, there's two things going on here, right? There's figuring out what the target weight should be over long periods of time based on how volatile gold and Bitcoin is trading. And the other part is the actual rebalancing of the portfolio back towards that target. That's the magic sauce, how often you rebalance, what those targets are. How have things been going for you? How's the performance of the Bold ETP been?
It's been amazing. I don't want to speak out of turn because the third birthday is on the 27th of April. So we're not there yet, another month to go. But I'm quietly confident, Nick, that of the world's 12,000 exchange-traded funds, it's got the highest Sharpe ratio of all of them. And that's not a statement I'd make lightly. That a Sharpe ratio is a risk-adjusted return, so the amount of return you get for the amount of volatility in the product. And the amazing thing about, if you show that volatility chart, is how the volatility of Bold is not, in the middle of Bitcoin and gold. It's only very slightly above gold because of the countercyclicality. So that means that they're diversification beneficiaries. So if you put gold and silver together, you wouldn't quash volatility. If you put Bitcoin and Ethereum together, you wouldn't quash volatility. But if you put Bitcoin and gold together, you do. And so you get this magical natural outcome from the blending the risk on and risk off, which brings the volatility to a lower level than it ought to be. And the returns of both assets have been good. The rebalancings add 5 to 7% per year. So you put all that together and you end up with a staggeringly good performance. And I think over the last year, if you've got that chart to show, Bold's actually done better than both Bitcoin and even slightly better than gold. And that's a theme that keeps coming up. It doesn't always happen. Obviously, when Bitcoin's on a tear, there's no way you can keep up. But it's just fabulous, the fact that whenever Bitcoin's had a bit of a dip, Bold's always ahead. So I always think that if you own Bitcoin and gold independently, you'll feel the volatility. You'll still get a good result, but you must remember to rebalance because you're dropping 5 to 7% per year by not rebalancing. And that's really a statement to say that Bitcoin is not going to $1 million in a heartbeat. It's going to take a long time for Bitcoin to go from the current price of, just under 100,000 to $1 million. It may well happen over the next 10 or 20 years, but it's not going to happen quickly. And so the rebalancing is more important than the concentration. That's my clear view here. And then if you compare it to the NASDAQ, it's got extraordinarily high correlation to the NASDAQ, but it's just left it behind for dust. And people think the NASDAQ's a high returning asset. So there we are with the product with slightly higher volatility than the NASDAQ, and superior performance. Hence my statement that I think it's the highest Sharpe ratio in the world.
Conveniently, the last few weeks and months have proven your point beautifully, with the gold price rallying very strongly while Bitcoin went down. I also want to quickly mention the idea that having low volatility while investing in these assets is really valuable because they're famous for shaking people out. They're famous for making people sell in a panic when things go badly briefly and then missing out on the long-term rally. So if you can reduce the volatility of holding the two by allowing them to offset each other, you still get their great performance. I want to quickly quote from your website here as well. Since the inception of 21 shares ByteTree Bold ETP on the 27th of April 2022, Bitcoin is up 115%, gold 51%, and equities are 35.5%. Bold has returned 77%. A fixed 75 to 25 gold Bitcoin strategy would have returned 67%, so a little bit less. And that once again demonstrates the power of rebalancing. The 9.8% outperformance comes after fees. Which is just extraordinary. I mean, it's obviously been a good time for you because the gold price has rallied quite strongly and then Bitcoin has done what it does, which is go up a lot and then go down quite a bit every now and then. But it's nevertheless something you can't really argue with. So congratulations from me. How do people find out more about investing in it? What do they need to search for? How do they find out more about you?
So we've got a couple of websites. Because this is a Bold conversation, I'll just mention the Bold one. It's bold.report. And so strange old ticker, but a strange old URL, bold.report. And it's all there. Everything, there's presentations and commentaries and contacts and charts, and it's there. So I'd focus on that. And the product itself is run by 21 shares. So we provide, we own the Bold index, and they replicate that on in an ETF. And 21 shares website /Bold will get you there. And I think that's it really. I would say that it's difficult for UK citizens to buy this because the FCA have banned any all crypto related products. But a lot of people around the world can buy this if they want to. The fees are 0.65% per year, which is not very much. Obviously, it's cheaper to own Bitcoin and gold directly. But we do the rebalancing and I think that most people won't bother. It's just one of those things that's too hard to do and you don't get around to it. And also to do it inside a fund, sort of tax efficient in many jurisdictions, so you don't get a tax bill every time you rebalance. So there are some reasons, and I really don't want to sound like the hard sell at all, because I think if people get this, then they should look at it. But if you don't like Bitcoin and gold, then run, go and do something else.
Yeah. Well, let's talk about why. Why are you so bullish on the two? I mean, I've met lots of people who are bullish on Bitcoin. Obviously, I'm bullish on gold, and I've met lots of people who are bullish on gold. Why for you, is this going to just keep doing well?
Well, it won't always keep doing well. I mean, there are times, Bitcoin has had some nasty accidents. They're well publicized. 80% falls. It's had several of them since I've been watching it. But gold also, peaked at $1,900 in 2011 and went all the way down to $1,050. So gold knows how to go down as well. In 1980 to 1999, the price of gold fell 75% or something. So, they both know how to go down. I think that your extremes are reduced. So I don't think both Bitcoin and gold go down at the same time. We'll come to a reason why they might, but we're a long way from that environment. But basically, if gold goes down a lot, then Bitcoin will probably hold up, and so you'll be better off than if you had not owned both. And if Bitcoin goes to the moon, you would be worse off than not just owning pure Bitcoin, but you'd be very happy with that middle result. Your probability of happiness owning bold as opposed to making a decision on owning one of them or owning both of them and not rebalancing, you're going to be better off. So if you believe in Bitcoin and gold, this is a really good solution. But I fully understand how a lot of people don't like Bitcoin and don't like gold. So fine. But I would say, okay, what's the last thing? Why would it go down? Why would both of them go down? I think the argument for that comes in a few years' time, where we're all fed up with this debt world that we're in, or we have a reset or whatever it is. And somehow we go back to a hard money environment. And suddenly money becomes strong, interest rates are way higher than inflation, and we curb deficits, and we have, austerity and all those sorts of things. We have sort of Millet sprinkled all over global financial markets. If we had that, then I think the case for hard assets diminishes significantly. And that's what happened in the 80s. That's why gold went down so much. I mean, Bitcoin wasn't around then, but I think that if we had a similar scenario, neither of them would like it very much. But still, one is going to be worse than the other. And, you'll decline more slowly in bold in the worst possible environment than you would do by, singling out the other one. So I don't think that's anytime soon. I mean, you have to look at the budget today and so forth to realize that we're a long way from from this sort of world. So, it's a very attractive world for alternative assets right now. And this is the, most liquid, calmest, optimized solution that I could come up with.
Well, we're not supposed to give financial advice, Charlie, but basically you've said people should sell bold when they make Javier Milei the governor of the Bank of England.
Yeah.
And let's finish on that note. Charlie, thanks for your time. Congratulations on the excellent results. It's great to see it working out for you and your investors, and to everyone at home. Thanks for watching.